Rohr here with an early concise highlight on Friday, January 9th, 2015. It's currently 6:15 a.m. U.S. Central Time, and the reason we're coming to you a bit earlier than usual is we obviously want this analysis that will be only on the S&P 500 charts up before the U.S. employment report at 7:30 a.m. U.S. Central Time today. And it's concise also because so much conforms to what we had to say yesterday in the full global view video. So please refer to that, back to that for any extended views of the other instruments. So what does all this mean to the markets? Well, as we had expected, on the back of the strength off the FOMC meeting back in December, the market getting back toward the same critical zones back at around 1985 and 2013 back prior to on Tuesday and into the FOMC minutes release on Wednesday actually had a fresh up break from about 2005, but in fact once those minutes were out it never even got back and tested the 2013 level. That was also the important Fibonacci 2/3 retracement of the whole move up from the low in December back at 2062.5. Earlier that week into the meeting on the 17th, and actually it held 1985 on Tuesday. And interestingly enough, Wednesday minutes release, Thursday major gap higher. That's just like the December 17th to 18th statement that helped the market get the bid again from 1985, and the major gap higher Thursday. And in fact, as 2036 to 40 was a key failure level going back to early December, that it then exceeded again on Thursday the 18th. Lo and behold, we failed below that level on a gap lower Monday morning of this week, and yet we're back above 2040 right away on Thursday morning's gap higher. Now this put the market above 2050. And there's some further interim resistance up around 2060, but the bigger resistances are back up around 2070 to 75 and higher levels. Now what's important about that 2050, as you can see the congestion there from yesterday, is that it's also the first hour upward channel on the short-term chart. And of course this is going to be after the markets had approximately a full hour to digest the employment report, where they're looking for a gain of about 240,000 jobs, which is still pretty healthy. And the upward channel is in fact right here at around the 2050 area, 52 actually, but let's allow for some slack. And you can see the congestion in the 50 to 49 from throughout the day yesterday. In other words, back below this, the market might be ready to take a bit more of a correction. Now, we have to allow that the major, the gap down Monday, the gap up on Thursday, and of course the previous important congestion in the 36 to 40 area are going to represent some pretty good next support and critical area, even if the market should slip below the 2050 area. But we just have to see what happens on the back of the report. And that is pretty much it for the short-term view of the S&P 500.